This is the Friday, May 31st, 2013 version of the Market Plus segment. Joining us now is John Roach. John, welcome back.
Thanks, Mike.
One of the big news items out this week that we didn't have a chance to address on the show was the strengthening in home values as reflected by home sales across the country. We've seen it rise about 10% year over year. What effect does that have on the U.S. economy? Where is that going to lead us, do you think?
I think it's a real big deal, Mike. I think people need to go backwards a little bit and think in terms of what really got us into the problems that we went through from 2007 on, and it was a collapse in the real estate market. Residential real estate collapsed, not unlike what farmland did during the farm crisis, if you recall. And the thing that farmers now can look back and with experience and say, well, had I realized that farm prices would go up as much as they did from the bottom of the farm crisis to where they are now, had I realized that that could happen, geez, I wish I would have known that. And I think that what consumers are going to learn, or residential people are going to learn, is that home prices can do the same thing. From the valley that we experienced in 2009, perhaps, maybe the bottom of it, to where we go to over the next 5 years, I mean, it's going to be an amazing recovery. And it's already started. And I think that the best thing that we have out there going in the U.S. economy is this increasing value of homes. And I think it's going to continue faster and further and longer than most people realize. And so as we think about this in agriculture, we need to understand that how our consumers are going to have a better feeling about the financial situation because their number one investment, their home, is going up in value. And the number two investment would be anything that's invested in the stock market, and it's also moving up rapidly. So we're in a very strong economic situation as far as the United States is concerned, in my opinion.
Now, and one of the catches to, as we watch the stocks rise and home values rise, is that while consumers might feel wealthy, those two things don't really put any extra cash in the pocket unless you're selling your house or selling your equities. Is that wealth effect going to translate into increased consumer spending, do you think, here in the next 3 to 6 months in enough time frame to, for example, help the meat market, do you think?
Well, it's going to be slower for exactly the reasons you're saying. But I think that the first step is that you have to change people's attitudes. And once you change people's attitudes, then you start to that starts to impact across a pretty wide area. And so probably not in the next 3 months, perhaps, but as we look forward out into 2014, maybe even as we look out into the Christmas season for 2013, I think we're going to have a much better outlook, and I think people have to keep that kind of in the back of their mind as we look out to next year, as farmers are planning on, okay, what do I do in my business here this next year? I think you look for a stronger consumer.
Begin to anticipate increased growth because hopefully these effects are going to magnify one another as they feel more wealthy with their equities prices. They'll spend more. It's going to help corporate earnings. It's going to amplify and so forth. And
they all feed into that same pot. And remember, we've come out of the worst recession since the Great Depression, and the housing, I believe, will lead this economic recovery.
All right. Well, that is a bit of good news out there as we look to the future. We do have a couple of questions here from our followers on Facebook and Twitter. And Robert, one of the questions he's asking is, as we watch this, as you said, lethargic cattle market, do you think feeder cattle are nearing at least a temporary bottom? Should we expect at least perhaps a brief reprieve in the price fall that we've been seeing in feeder cattle?
The biggest problem with the feeder cattle business is that we are still having to pay $7 for corn, and we have lost a lot of equity in the business of feeding cattle. And so I think that the high-priced corn is going to last until we get out into perhaps August. And the only relief there is that we're harvesting a soft red winter wheat crop that, and to a lesser degree, a hard red winter wheat crop. and that will compete with corn. In fact, if you look at some of the numbers with the poor basis values on soft wheat relative to corn, we'll move more of that wheat into the feed ration than we would in most years.
Okay, but don't be anticipating any spectacular rise in feeders.
I'd like to hold out some optimism, but I think for the feeder cattle people for a little while are going to be slugging it out until we can get into the fall or get close to the fall prices.
Certainly. See what we're going to be looking at come harvest.
We will have cheaper corn. It's just a question of how much cheaper and how quickly will that come, and at that point then the feeder cattle can come up. And I think at the same time we'll have better economic outlook, which will help over on the fat cattle side.
So it's going to be a tough summer, but get through it, and then we'll see hopefully a little better scenario.
That's exactly my concern. It's going to be a tough summer.
Well, now the other couple questions we've had, most of them revolve around weather. Been a big issue this past week. Mark in Kansas is asking, when is the weather going to turn these markets from bearish to bullish, or have we already seen that happen?
Well, the corn market's up, I think, new crop corn's up, I think, 50 cents a bushel. New crop beans are up sharply. So we are already seeing the market dial the weather in. We'll come in on Sunday night, and the traders will take a serious look at what the weather looks like next week, what the weekend has been like, and if it looks like we're going to make some progress in the field, then you'll actually see the weather come out of the marketplace. You'll see some weaker prices. But on the flip side, if it looks like next week we're not going to get much work done, then we'll probably see another few days at least of stronger prices. We think that the best weather forecast that money can buy is traded every day in the Chicago Board of Trade. And so watch the trade, and it'll be based on whatever the forecast is Sunday night. And going home on Friday, we're going home with strong prices because it doesn't look like we're going to get very much work done in the early part of next week.
All right. The other question, Nell is asking, do you take the preventative plant on corn? As we look at, there's no guarantee people are going to be able to plant by 6/10/2013. How is that going to impact plant decisions, soybean acres? What effect is all of this moisture going to have longer term in the grain complex?
Well, we think that the first impact is that we're going to reduce the corn acreage a bit. We're not sure how much. We think that farmers will try to plant the corn as long as they can get it in the next 10 to maybe 14 days, something like that. We think farmers will continue to do their best to get that corn planted. When we do the number crunching, that seems to be the answer most producers give us. After we crunch the numbers, they still want to plant the corn. But that's a moving target, and it's going to change according to the weather. But each producer needs to look at their own farming situation and talk to your crop insurance person to make sure you really understand and you've got your arms around what prevented planting really does for you. As we've had those discussions with producers, sometimes there's an aha moment when the clarity comes and they decide, well, I don't think I really want to take the prevented planting. I think I still want to get it planted if I can. But as you can imagine, there is a deadline to that as well. But we think it's still a little ways down the road. We think here in Iowa, as an example, it's still another 10 days to 2 weeks down the road before people will will take prevented planting. Even though they would be eligible to take it, we think that they will not until they exhaust all opportunities.
So give it good consideration.
Talk to your crop insurance person so that you can understand on your farm exactly what it means to you, because it varies according to the coverage of insurance you have.
Certainly. Well, thank you so much, John. Really appreciate you being here, and really appreciate all of you sending in your questions via Facebook and Twitter. Please continue to do so, and we will continue to have experts answer them for you. Thanks for watching. I'm Mike Pearson. Have a great week.